Hey everyone, welcome back to Corporate Decoder, the place where we turn complicated corporate reports into something you can actually understand. Today we're diving into AUDDIA INC, SUS's latest filing. It's like trying to decode a radio signal in a storm, but we'll get through it together. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you want to discuss these reports with other investors after the show. So what's the story? AUDDIA is trying to raise up to $150 million by selling different types of company stakes, like common stock, preferred stock, maybe even some debt. They're looking to make some financial moves, but is it a strategic symphony or a risky remix? Let's find out. First off, AUDDIA classifies as both a non-accelerated filler, meaning they aren't moving super fast in the financial world, and a smaller reporting company, telling us they are not one of the giants of the markets. They're also an emerging growth company, meaning they are taking advantage of a few shortcuts to navigate the complicated requirements of being public. Scroll our working capital deficiency, cash stockholders deficit. Scroll, here's the thing, they admit their financial situation raises substantial doubt about our ability to continue as a going concern. That's accounting speak for, we may not have enough money to keep the lights on. The auditors even mentioned this in their report, not a great sign. To keep the lights on, last year the company issued something called Series B convertible preferred stock. Basically, it's a special type of stock that pays dividends and can be converted into common stock maybe at a discount. As of June of this year, about 1,700 of these shares are still outstanding, meaning still haven't been converted into regular common stock. The report does say they're incorporating a previous year's annual report and some more recent documents. That means most of the financial data and risks might be in those documents. Scroll, Haney & Company, CAF independent, registered public accounting firm Scroll, audited by Haney & Company. To make sure they looked correct, they may also try to issue debt securities under something called an indenture to raise funds, which is basically an agreement between the company and a trustee protecting whoever buys those debt securities. Legal firm of Carroll Legal LLC is giving their approval on the issuance of the securities and their legality. So what do we make of all this? AUDDIA is at a crucial point. On one hand, their main app Phaedra has potential in the changing world of audio streaming. On the other, their financial health is worrying, with major questions about whether they can continue as things are. This creates a high-risk, high-reward type situation. If AUDDIA can secure funding and show a real market for Phaedra, there might be an interesting opportunity. But that first sentence raises substantial doubt, is a pretty big red flag. While AUDDIA has a unique product in the audio streaming space, the challenges they faces and the need for additional funding means investors should be very careful. Alright, that's our breakdown of AUDDIA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.